Good evening and welcome to Your Money, Your Call. I'm Mark McCarthy. It's Thursday night and as usual we're talking shares. If you have a question about shares or the market in general or about currencies or anything you feel like asking, give us a call. The phone line's now open and you can call us on 1300 30 34 35 or you can also send us an email at yourmoney@skynews.com.au. Joining me on the panel tonight is the erudite and urbane Michael Kodari from Kodari Securities. And he's there he is. And one of our more colourful technical analysts, Les Shancer from Paradigm Securities. Welcome to the program. And welcome to the show, gentlemen. Well, Les, we haven't seen you around for a while. And it's probably an opportunity you're on tonight because obviously the market's lacking direction. We've seen the ASX 200 bounce between 5,000 and 5,400. And I think in a lot of these times of uncertainty and sideways trading, you see people refer to the charts. What are you seeing on the charts at the moment for the ASX 200?
Well, I'm glad you give me the responsibility of directing the market, which I'll obviously endeavour to do. And the reason you haven't seen me was I was retired for about 3 minutes and then Barry Dawes from Paradigm suggested I come and join him. So
they can never keep you away, Les.
No, and that's why I'm Paradigm. What do I see in the charts? I think certainly in the immediate future, I see that the market is trying really hard to forge ahead. That's commodities, stocks, bonds are up and down, but they go up and down depending on what happens with the other two I just mentioned. Mm-hmm. I think right now the market is poised to have a good run. Now, we all know sooner or later it'll fall over, but you have to make hay while the sun shines. So I would say the time to make hay is now. And yes, you can always find 100 reasons why the market won't do well, and you can find 101 why it will do well. But my gut feel is it's really trying very hard to push ahead, and I think commodities, stocks are going to push ahead.
OK. Michael, much has been written about the underperformance of the Australian market compared to Wall Street. We saw Wall Street hit new highs in the S&P 500 on Tuesday night. Backtracked a little from there. But our market, I mean, obviously people are looking for it to break out. I saw a report this morning suggesting that some of our blue chips are at overvalued levels. Yep. What's going to take this market to break out?
Look, I think, Mark, I think Wall Street will still continue to go up higher. This is a time in the US where the economy is getting better. The markets had a very good run. And again, stock market's a leading, I guess, indicator of the economy. So usually the economy lags behind the stock market. So for our market here, I think in the next, I think the bull run or where you should have bought in stocks 3 months ago is where that turnaround came. And I think in the next 6 months, you'll see GDP growing. You might see unemployment dropping. I mean, unemployment, interest rates are the key to having, I guess, a robust economy, and that will drive the stock market even further itself. So I think, our blue chips, I don't think they're expensive. I don't think the market's expensive. It's very hard to value the stock market. I don't understand how people do it. So,
Should you be admitting that?
I don't understand how you can value it. But, for me, in terms of looking at the economy, I think in the past 3 months, we had early signs that the economy is travelling well. Business confidence is high. Consumer confidence is high as well. So, I think now's the best time to be in the stock market. And we haven't had that bull run yet.
Yep.
So, I see that bull run happening from now till the next 2 years or even further. So, I think you can't. History doesn't repeat itself. But you can learn a lot from history.
You mentioned that the interest rates are the key, and I agree with you on that. The RBA, though, at the moment, it's almost caught between a rock and a hard place. They've taken a very sanguine line in regard to the economy itself.
Yes.
I think the common feeling out there at the moment is that they've now sort of taken off the easing bias. We had Bill Evans turn around, and they're now looking for the next move to be a rate hike rather than a rate cut.
Yes.
There still seems to be mixed signals coming through the economy. Yeah, As I said, Glenn Stevens not too worried about the unemployment rate.
Yeah, the biggest problem is unemployment's the highest it's been in 10 years. I mean, it's at 6%. So, what does high unemployment cause for our economy? More uncertainty with households, more uncertainty in businesses. The way the government can help that, or the RBA can help that, is by reducing interest rates. So, I think it was a very wise decision to keep it at 2.5% until we see some growth and a reduction in the unemployment rate.
Right, OK. Liz, do you have any feel for how the RBA is going to handle the economy or handle monetary policy going forward?
Well, I think I agree that I can't see any reason why they'd be bumping up the interest rates anytime soon. I mean, if we are going to have a bit of a bull run, and I agree with you entirely that that's definitely on the cards, why would we want to do something that can potentially stifle that? I mean, what's the point? In America, they throw things at the economy, at the market, to try and make it go well. And we don't have to go quite that crazy, but there's nothing wrong with not doing anything to stifle it. I'm not saying you necessarily have to stimulate it, let the market forces look after themselves, but what's wrong with not putting any hurdles in its place. So I don't think they're going to change the interest rates anytime soon, certainly not in a major direction. And also, I don't think inflation's going to change anytime soon either. I mean, it can go up a bit or go down a bit, but it's not going to magically go up like it did many, many years ago. And if it does, that's a different story. Yeah. And then, of course, you start changing interest rates. But right now, I think it's steady as she goes and let the market look after itself. And I think it will. I think it will.
All right. Let's go to our first caller. We've got Gordon from Taree. Gordon, are you there? Hello, Gordon? Gordon?
Hello.
Hello, Gordon. How are you? Sorry about
Not
that.
too bad.
Thought we'd lost you there for a moment.
I was hoping I didn't get cut off. Look, I'd like to talk about Rum Jungle.
Rum Jungle,
your panel's view and yourself's view. Quite a few years ago, I bought 65,000 shares. And just recently, quite a few months ago, they took over CEN. And they've just put out an announcement about 3 weeks ago, that they're now the largest rock phosphate company in Australia, and after more examination of the extra land they've got expectations of over 1 billion tonnes of rock phosphate.
That's a lot of
what
phosphate.
I'm wondering is, that being the food bowl in Asia, would it be worth going in at 13 cents and buying a lot more and getting in on the ground floor?
Can I ask what level you got in at beforehand?
I'm sorry?
Can I ask what level you got in at beforehand?
Yeah, I got in at 48 cents.
Oh, okay. So you want a bit of pain on the slide down.
I have, but I've hung on because thinking about feeding all of Asia and all of Australia, now they're the biggest company with rock phosphate. And I know there are other people that are already producing, and they haven't started producing yet, but they're... technicians and engineers have been over at China with the company that they're, I'm hoping will go in partnership with them to start mining.
All right. I think Gordon raises quite a few good questions there. One in regard to phosphate itself. That was once a market darling in a big way. It actually reared up again a couple of years ago with a lot of the Canadian phosphate companies. And secondly, and probably more importantly going forward, is the whole idea of Australia being a food bowl for Asia.
Yeah.
Mike, what are your thoughts on that and the prospects for Rum Jungle?
There's two things. Just in macroeconomics, Chinese economy will slow down. It has to. It can't keep going at 7.5%. So, in terms of macroeconomics, that entire sector doesn't look very much positive for me. And a company like Rum Jungle, I hate to disappoint Gordon there, they've got negative cash flow. They haven't produced anything yet. I mean, the key thing is your production costs. Yeah. So, it's great to have all this phosphate, but at what price can you dig it out of the ground? I mean, that's the key question. So too much uncertainty. The company's market cap's very small. You got to. This is the sort of the sector that the large companies are struggling, and you got a company like this with a market cap of $50 million, which trades about 5 times a day. Yeah. So I see this as being a high risk investment. Do I see a lot of upside? Not in the short term. I mean, these things are great, but a lot of it has been factored into the share price already. So it's old news.
So if you're given the opportunity to invest in something better, you'd probably take that.
Exactly.
Yeah.
Yes.
Okay. So, So Gordon, not so good news there. Let's go to Zoran from Murrumbina. Zoran, are you there? Hello, Zoran. Hello. Hello, Zoran. Sorry, we seem to have a few technical difficulties at the moment. So, do you have a question there, please?
Yes, we got about the Condo Banco, CDB.
So that's on CDB, is it?
Yeah, Condo Banco, yes, that's correct.
Condo Blanco. Okay, let's go to Les. Let me get the chart up on CDB.
I know a bit about CDB. I know quite a bit about CDB.
Let's go to Les.
Okay, I can't see a chart, but I don't need a chart. Look, CDB is a really interesting story. Currently it trades at well under a cent. They've just got a 10 million euro funding bond, which they're monetising as we speak, which is 15 million Aussie dollars, which has enabled them to pick up some very lucrative coking coal projects in South Africa. On top of that, they've got an iron ore tailings project called Marielinas in Chile, which is waiting to get just waiting to go into production, but these funds are going to enable them to do that. And they've also got a very promising Caricachampa site, which is a gold, copper and silver play. Now, the interesting thing is they're very diverse, they've got some fantastic projects, and the share price is pathetically low. And I think, honestly, I quite think that this potentially could be the buy of the year, potentially, because they've got great projects, they've got funding for a lot more than the company's actually worth. So obviously the people funding them have seen something that the punters don't see because they're not in Australia. If their projects are in Australia, the share price will be a lot higher. So my call on CDB is, would you rather buy it when it was less than a cent or when it's 10, 15, 20, 50 cents? I think it's a great buy and I think it's a great story. And if you want to know more about it, you don't have to take my word for it, go to their website and have a look and see. Do your own due diligence. But I tell you, I really think it's a good buy.
So what is the current share price, Les?
I think it's about 0.6, 0.7%.
Wow, okay, well, that's emphatic.
Yeah.
Excellent. Michael?
Look, it's too small for me to invest into it.
Yep.
You know, so
You could become a major investor.
I could take over the company. No, but Leslie's got more information on me, so it's not a stock that I've been looking at. So I can't give insightful comments about it because the market cap is way too small.
Okay, no problem. All righty, it's time for a short break, but we'll be back with more of your questions in just a moment.
The economy's the worry.
We'll fix that. We'll build a stronger five-pillar economy, delivering 2 million new jobs in manufacturing, services, agriculture, education and mining.
Authorised Bill of Name, Liberal Party, Canberra.
15 carriages on an icy slope against bitter winds, just like I did on Everest. But you have a Mars bar, son.
With the Mars comes great responsibility.
For the life of the car you love, we'll replace it with a brand new one if yours is ever written off. Just take out GIO Platinum Car Insurance within a year of buying it new. GIO, it's a trust thing.
A lot of people ask me who Care Super looks after. Well, actually, it's a super fund for all sorts of professionals, whether you work in an office or in front of a camera. The care part is simple. They care about your super. And better still, they get it. That even with a busy life, you need to feel in control of your money. So they let you choose a level of control you want. They have strong returns and they're so easy to deal with. That's why we're with Care Super. You can find out more at whyshouldyoucare.com.au.
How does it feel to have someone take all of the hassle out of finding our home loan?
Know the feeling. Call Mortgage Choice.
Start the week with a different viewpoint. Join me as we look at the crucial national issues from outside Canberra's politically correct bubble.
That's the sort of rhetoric that we're protesting against.
Sorry, rhetoric? There'll be big interviews, lively debates.
The Labor Party has been re-energised.
Insightful analysis.
Very little confidence in the state of the economy.
It'll be unashamedly mainstream and there'll be unashamedly strong opinions.
You say it's a contradiction, Chris. I don't accept that it is.
Join me for Viewpoint, live Sunday nights on Sky News.
Welcome back to the Thursday night edition of Your Money, Your Call, where we are talking shares. I'm Mark McCarthy, and on our panel tonight we have Michael Kodari from Kodari Securities and Les Chancer from Paradigm Securities. We're still taking your calls, and the number 2 call is 1300 30 34 35, or you can email us at yourmoney@skynews.com.au. Let's go straight to our next caller, and we've got Michael from Sydney. Michael, are you there?
Yeah, hi guys, how are you going?
Well, thanks, how are you?
Good, thanks. The stock I'm calling about is iProperty Group.
Yep.
I've been following it for the last 6-7 months, and I've been looking for an entry point to get into the stock, and it just keeps running away from me.
Yeah, that's frustrating.
Now, I've noticed the last few weeks that we've got a bit parabolic there to hit $4, and it's come back around the $3 mark. In fact, I think it closed at $3.13 today.
Yep.
I was wondering if your panel could maybe give me a technical on it, a good entry point and maybe a stop loss, please.
Okay, let's go to Michael first to get a fundamental, just a bit more about the company, and we'll go to Les on the technicals. But Michael,
look, they operate in a very interesting sector. You know, it's like REA realestate.com. So their main focus lies in Asia. So you know, your Hong Kong, Singapore, Malaysia. So it's an interesting concept in terms of financials. They're nowhere as good as realestate.com.
Yeah.
Let's say. So you know, they've had a very good run. They've pulled back in the past 2 weeks. You know, in terms of intrinsically valuing this stock, it's very hard to do so. So the valuation would be much below the trading price. But technical could be different. So you know, it might be a time to get in. But it's had a very, very good run.
Okay, and that chart there, Les, is, reveals what Michael was talking about. That strong run up to $4. The pull back to $3. Is that a good buy signal for you?
Well, potentially you can see there's a bit of support just where it's dropped to, and then it's come back up again. You know what Isaac Newton said, you chuck the apple up and it's going to come down again. And when parabolic rises happen, often parabolic declines happen as well. And that hasn't really had a parabolic decline. It's had a part of one. So I'd be a little bit wary, to be quite honest. I mean, depends how desperate you are to get into it. I mean, I guess I'd be looking at somewhere around between the $2 and $3 mark to have a buy-in.
Yep.
And if it went down to that, it potentially could go down a bit more. But there's a lot of support around that, just under that, or around that $2 mark, if you can see. A lot of support. So even if you bought it a little bit higher, and if it did come down and hit that and back up again, you're in the money. So it's difficult to pick on a stock like that basically has been in a very small range there for a long time and suddenly goes crazy and falls down again. It's very common when a stock shoots up, it'll shoot down again. I mean, it's not always the case, but it's very common because people come in and take profit.
Yes.
So I'd be wary and look, a good entry point, obviously great entry point would be probably $2, but I don't know if it's going to go back to $2.
Yeah.
And the problem with buying it, people always say buy on the dips. The only problem with waiting for a dip is often it doesn't come back and dip enough, and it does run away and you lose it. And so if you really want it, you've got to be prepared to pay a little bit for it, but I wouldn't be getting in just yet. I'd wait to see if we can get a bit more of a
Michael
dip.
was just made mention of the fact that he's been chasing as well, and it just keeps running away from him.
And that's what happens a lot.
Yeah.
When you so-called wait for the dips.
Yeah, yeah. Tough call. All right, let's go to Anthony. Anthony from Adelaide, are you there?
Yes, Mark, I am.
Hi, fire away.
Thanks for taking my call.
You're welcome.
First of all, I'd like to congratulate Michael on TPM. It's been a great call by him. He's been telling us for months to jump on the bandwagon, and which I did, and I'm very grateful.
Oh, good stuff. We love positive feedback. I'm sure we'll flash over to Michael in just a second. He's got a big grin on his face.
Les again. We haven't seen him for a while. Hello. But the company I'd like to talk about is called Capital Health, which is CAJ. Now, I purchased some around the 51-cent mark and some at the 61-cent mark.
Averaging in, yeah?
Yeah, and it's gone to about 68 or 69 today.
Right.
And it seems to be going almost parabolic. I know some guests that have appeared from like Lincoln Indicators and so on have said some very good things about it. And I would like to know what these two gentlemen have to say, because I intend to hold some as a long term.
Sure.
And trade some, as a matter of fact.
Good. Good strategy. Okay, let's go to Michael first off and get the words from the sage's mouth.
No, I love the healthcare sector. You know, I like TPG Telecom, and last time, obviously 2 weeks ago, I mentioned that it's a good buy. I've been mentioning for the past year and a half. So since then, the stock's gone up in excess of 120%.
Yeah.
I think in the healthcare sector, my favourite's been Ramsay Healthcare, and another consistent performer. This company here again, it's got good cash flows that are increasing, sales are increasing, return on equity is quite consistent. So it's one that you can definitely add into your portfolio. But my favourite healthcare stock has been Ramsay Healthcare.
Stick with the
and I'm continuing to buy Ramsay.
All right, continuing to buy. All right, Les, good-looking chart.
It's not an RCLC, is it, my friend?
No,
do you remember the RCLC?
I remember the RCLC.
Okay, that's actually
no doubt we'll see one tonight sometime.
Oh, we'll probably see more than one. And look, it's actually a very good-looking chart. It's not, I wouldn't call that a parabolic rise. It's a nice steady rise with a little bit of a sharp increase. But it's actually a nice steady rise. You look right from the bottom of the chart to the top. It's only going in one direction. Obviously, it's going to go up and down as it goes along the way. But it's a really good-looking chart. Where's it headed? I don't know. But I think what you said was that you wanted to trade a bit and keep a bit. And I think that's a sensational idea, because nothing's wrong when you're making profit, taking a bit of profit off the table. And ultimately, if it does the right thing, you could get your original stake back and still be in the trade. And that's got to be a fantastic way to trade. So I think your methodology is the right way to go. And I think at this point in time, stock looks good, and I can't see any reason why it should be falling back.
Excellent. Good to hear. OK, well, it's time for another short break, but we'll be back with more of your questions in just a moment. Remember, if you want to get in on the conversation, give us a call on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au.
Because Bingle is part of the Suncorp Group, any car repairs you may need are carried out through our network of quality repairers and come with a lifetime guarantee. Because we want Bingle customers to be 100% happy. Get a quote at Bingle.
15 carriages on an icy slope against bitter winds, just like I did on Everest. You have a Mars bar, son.
With a Mars comes great responsibility.
When you've got that afternoon hunger, it's time to head to Hungry Jack's. Because 6 golden chicken nuggets are now only $3. 6 delicious chicken nuggets now just $3. The burgers are better at Hungry Jack's.
While your rivals are chasing deals all over town, you play the ultimate advantage. You invest in corporate hospitality at Etihad Stadium. You invite your business prospects, the exclusive dining, the sommelier, the bars, the live footy. They're electrified by the atmosphere, cheering from the leather seats. The roof amplifies the roar of the crowd as you win over yet another client. Etihad Stadium, brilliant for business.
There are lots of uses for Dettol Glen 20 outside the bathroom, like eliminating odour-causing bacteria on surfaces in the bedroom, living room and car. Dettol Glen 20, one spray, 101 uses.
If you thought the colour and movement of politics was going to die down in 2014, think again.
Hasn't this been fun?
The makeup of this place is going to keep things interesting. Labor and the Greens will make things difficult for the Abbott legislative agenda.
We are not going to give them a blank cheque.
Not the time.
And beyond July 1, the colourful crossbench will have to be managed.
I can do so much more.
Join me for the 1 hour AM agenda.
Judge us by our performance.
Massive breach of trust.
8:30 weekdays here on Sky News.
Welcome back to the program. This is the Shares edition of Your Money, Your Call. I'm Mark McCarthy, and I'm joined tonight by Michael Kodari from Kodari Securities and Les Shancer from Paradigm Securities. If you have a question about stocks or shares, you can call us on 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Our first call after break is John from Adelaide. John, are you there?
Yes, hi. Yeah, I'd like the panel's view on ARI, Arium Limited, please.
Arium Limited, yes. Are you currently a shareholder there, John?
Yes, I am, yeah.
Okay, and have you been happy with the performance so far?
I'm a bit concerned about the iron ore price, I guess. So that seems to be affecting the share price.
Yes, good point. Okay, let's go to Michael on Arium. And the share, the iron ore price as well.
Yeah, so look, Arium's performed very well. One of the key things that I see is the sales is dropping. Iron ore, I was a big favourite of Fortescue Metals, so that did quite well for us. But I think at this stage, iron ore is it's a very cyclical thing. So during the winter times, the Chinese building usually slows down. So iron ore, no doubt in the long term, China's going to consume more iron ore, and so will we. But I think for the short term, the iron ore stocks will not be the top performers.
Les, that chart, I think, somewhat reflects the price of iron ore over the last couple of months. Was up at around 140, has sort of pulled back now down to about 110 or 115, I think it was this morning. Arium, the prospects going forward, looking from the chart,
well,
what do you think?
You can see from the double top there that obviously each time the price goes up, the iron ore goes up, the stock goes up, and then the price goes down. So if you're going to trade a stock that deals in commodities, especially iron ore, and the price is a little bit volatile, then it depends on your point of view. You're a short-term trader, then you've got to pick your times to get in and out. If you're going to hold it for the long term, I think in the long term, China will still take tons and tons and tons of iron ore, and iron ore will still be a very valid commodity. And the price will bounce up and down, as does all things that can be traded.
Yes.
It's not just a commodity for use, it's a trading vehicle as well.
Yes.
So if you're got a long-term point of view, I'd hang in there, because I think, and ignore what is going on the noise on a daily basis. If you're a trader, get in when it goes down, and get out when you see it getting towards that double top, where you see the price of iron ore starting to drop off.
Yeah, and just to back up those words as well, we heard from the CEO of Vale, the big Brazilian producer of iron ore, and they were saying that they don't see any concerns with China, so they're quite happy with the situation. I know there's a lot of concerns out there, and I, for one, have mentioned quite a few of them as well, but certainly the iron ore producers themselves at this point in time are quite happy with the current situation in China.
Can I just partly allay a fear of China? Because I hear people pontificating on various business programs about, China's only going to grow by 7% or 6% or whatever. Well, the fact of life is simple. 10 years ago, China's economy was about $680 billion. Now it's just under $400 $4,000 billion. So 7% of $4,000 billion versus 9% of 680 is a hell of a lot of a difference. That's still a hell of a lot of growth, and nearly every country in the world would be happy with half that growth. So I'm not saying we don't want them to have a higher growth. Obviously, everyone does, but it's not quite the drama that everyone seems to make out. It's the second biggest economy in the world now, and it's growing at a very great rate. And because it's getting bigger and bigger, we're having 7% of a bigger pie, even though it might have been 9% of a smaller pie.
Yes, that's an argument, I think, put forward by Peter Switzer and Michael Pascoe, which obviously makes a lot of sense.
I'm glad to see I'm in good company. I
I
didn't hear them, but I'm glad to see
you're always in good company, Les. OK, time for our next question. It comes via email. And Julianne writes, what is your view on Cochlear? It's been downgraded recently by a major broker, but does it really look uncertain? This seems to be a perennial question that we get on a regular basis. From a lot of our viewers. Cochlear, obviously they're facing competition from Chinese producers, although Howard Coleman would point out that if you're going to buy a hearing device, which would you rather buy, the high-quality premium product or one from China which is slightly less in price?
What would you rather stick inside your head? Because it goes into your head.
That's right. Yeah.
I think people will punt for the known and proven quality product. I'm not saying that China can't make a decent product, but the Cochlear product is known, well and proven, and you're not just sticking it in your ear like these ear things we're using, you're actually putting it inside your skull. And I think people will be very wary about what they're putting inside their skulls.
So looking at the chart there, Les, you think that's, I mean, obviously...
The chart tells me it's going nowhere.
Yeah.
So I wouldn't be in a hurry to buy it and I wouldn't be in a hurry to sell it unless I needed the money.
Right.
I mean, it doesn't look like it's doing anything dramatic anytime soon. It's got quite a good... base rate there, you know, the support line there of around that $55, maybe $56, $57 mark. And it does spike every now and then, but you can see most of the time it's in a pretty narrow sort of range. Yeah. So if you want to have it in your stocks as your portfolio, I don't see a problem with holding it. I don't know that you're going to get massive growth in the short term. You might get some growth in the long term, but as I said, it's a very good product, and I think it will always hold its own.
Certainly a good product, Michael, and also good management, or has been good management in recent years. What's the outlook going forward?
Look, I just think, you know, it's the recent hiccup that they've had, and, you know, they're a good quality business. There's not a lot of businesses out there that give you a return on your investment of 37% on a yearly basis, so they've been very consistent. My biggest fear around Cochlear is that their cash flow have reduced more than half. So, you know, in the short term, I don't see the share price of Cochlear going far, but it's one of those stocks for the long term you can have in your portfolio. But then again, it's all about time is the most precious thing in the stock market, and it's about picking high-performing stocks within a short period of time. So, you know, I think long term they're a great company to have in your portfolio. In the short term, I'll probably look elsewhere for more opportunities.
So, do you think the price is going to pull back even further from current levels?
We'll probably sit around the current levels, and you know, I might do that for a while. So, you know, until I guess everything clears up.
Yeah. Liz, you mentioned you couldn't see a reason to buy or sell it.
Well, it isn't going anywhere, so let me rephrase that. I don't see any urgency to buy it or sell it. If you think you're going to sell it because you think it's going to dramatically drop, which of course it can, but from looking at the chart, it doesn't look like it's going to dramatically drop, and by the same token, it doesn't look like it's going to dramatically increase either. So if you're sitting there looking at it, I don't think I'd be racing out tomorrow to get it because I thought it was going up, or selling it tomorrow because I thought it was going down. My point is I think it's not going anywhere for the time being in a major move.
Major move, yeah.
So it's something you can look at, and if it goes down to a certain level and you're happy to buy it at that level, you buy it. And if you own it and you want to sell it at a certain level and it goes up to that level, you might sell it. But I don't think it's one of those stocks that's going to bounce dramatically, unless we hear some bit of news that is great or disturbing.
Yeah. OK, all right. Well, we'll be back with more after this short break.
"15 carriages on an icy slope against bitter winds, just like I did on Everest. You have a Mars bar, son."
With the Mars comes great responsibility.
When you've got that afternoon hunger, it's time to head to Hungry Jack's. Because 6 golden chicken nuggets are now only $3. 6 delicious chicken nuggets now just $3. The burgers are better at Hungry Jack's.
I'm looking for a provider who gives me everything I need to trade Forex in one place.
I want customizable charts developed for Forex traders, transparent prices and a stable platform.
I want a provider that presents me with Forex trading opportunities 24 hours a day.
That's why I trade Forex with IG, Australia's #1 Forex provider.
Over time, high traffic areas become dull and grey, even with frequent vacuuming. So try Vanish Preen Power Foam. It removes 3 times more ground in dirt than vacuuming alone by going deep into the carpet fibres to help loosen and lift ground in dirt.
And leave your carpet looking clean and fresh. High traffic areas no longer stand out with Vanish Preen Power Foam. And for spot stains, try Vanish Preen Oxy Action in your supermarket now. Brand power helping you buy better.
If you thought the colour and movement of politics was going to die down in 2014, think again.
Hasn't this been fun?
The makeup of this place is going to keep things interesting. Labor and the Greens will make things difficult for the Abbott legislative agenda.
We are not going to give them a blank cheque.
Not the time.
And beyond July 1, the colourful crossbench will have to be managed.
I can do so much more.
Join me for the 1 hour AM agenda.
Judge us by our performance.
Massive breach of trust.
8:30 weekdays here on Sky News.
Still spelt my name.
Welcome back to the program. Joining me on the expert panel tonight is Michael Kodari from Kodari Securities. There he is. And Les Shancer from Paradigm Securities. I'm Mark McCarthy. If you've got a question about shares you'd like answered, please give us a call on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au. Let's go to Minerva from Sydney. Minerva, are you there?
Yes, hi panel, and thank you for taking my call.
You're welcome.
I'll be interested to know your views on G8, GEM. I currently own shares in G8 and have had tremendous growth since we bought them.
Yep.
However, I'm very concerned with the rate that G8 management team is going on a shopping spree of childcare centres at the moment.
Right.
And I'm worried it could follow the same fate as APC Learning. I understand they're currently managing the debt situation better than ABC did, but I worry about the intangible values, the speed of the acquisition, the quality of the management team, and of course the dilution of shareholder equity due to capital raisings. Should I participate in the SPP or take profit now?
Very good question, and obviously Minerva raised some very valid concerns about the current situation, especially in light of Eddie Groves and ABC. Of course, there was yet again another example of build a debt empire, and it'll eventually collapse. But G8's had a great run over the last year or so, Michael. What do you think about G8 Educate?
Businesses like GEM, they're on a leverage. You know, that's how they keep making more and more money. So they want to acquire child care centres, fix them up, implement their own model. And, it's a good business. You know, G8 is a good business. They recently acquired Sterling, which they paid $228 million for.
Yeah.
And, I think in the long term, they'll be definitely one of those companies to watch. And, for me, I see it as a good company with good prospects moving forward.
Sure. Okay. So at these current levels, though, do you think what's the PE at the moment? You say?
The PE. Looking at the figures, the PE is quite high, 42.
Yeah.
So they're at that stage in the business where they're just acquiring, redoing the model of the childcare centres, and then the earnings will come later. So I think they're trading the $4.82. I think they're a good business. So down the track they'll have good prospects.
Faith.
Yeah.
All right. Les, that chart we just saw was obviously looking a little bit, it's had a great rise. Is it looking a little bit toppy to you?
I have two things I'd be wary of, and I think I agree. I think it is a good company, and I think they're doing great things. They have risen up quite dramatically share price-wise again, and that's always a little bit of a worry. And the other worry, a slight worry, is that when companies are out buying up other companies, especially when they're leveraging to do it, they often pay too much because they want to get the asset. Yeah. And that would be, I'm not saying they are paying too much, I'm saying that it's not uncommon that they pay too much. And if the people who are holding the shares think they pay too much, they jump ship and then the price drops. So we can't really tell you what you should do. We're not financial planners, but what I would suggest is it never hurts. If you had a great run, it never hurts to take some profit. And if you can be in a position where you get your original stake back and you still have a nice holding in it, then you're in there for nothing. And that's the way I look at it when I have certain stocks. If I can get my original stake back, I'm laughing.
Good advice. All right, let's go to Michael from Melbourne. Michael, are you there?
Hello.
Hi, fire away.
Look, guys, love the show. Never miss it. Just a quick question. Resources, SYR, graphite producer.
Yep.
I got into it about 6 months ago. Did a lot of research on it. I know I got in about at $2.40. I think it traded today at about $3.70, dropped 9 or 10 cents. Did trade up as high as $3.95. Apparently, it's a rich mine. The Chinese are committed to taking 30% of the initial production, and I'm just wondering, guys, I was told it'd probably get to $5 or $6 when I bought it. Just wondering what you guys, because you guys are better at it than I am, what you think.
Well, that is a dilemma, let's put it that way. Yeah, when there's expectations it could go higher, but you've already had a good run out of it. Graphite, that's another sort of story, isn't it? Phosphate, graphite, mineral sands.
Graphite's the new place to be.
Graphite's the new phosphate.
Flake graphite. Flake graphite is the new place to be.
Okay, let's go to Michael first off on Cera Resources. There's a chart that Michael's just been talking about, the other Michael from Melbourne. Had a great run. Time to take some profit, or consolidate, get back in again?
Look, I think they've had a very good run. You look, the company's got negative cash flows. They're not making any money as of yet. Yeah. It's very hard. I mean, I think in terms of what they do, they've had a very good run on the back of speculation. I mean, this new deal with the Chinese taking 30% is great for them. But, in terms of risk-wise, I think the risk is quite high. So, graphite is great itself. But, it's all about, what's your cost price. The biggest problem with a lot of these mining companies is you can't, if you're in a different sector, you can put your prices up, but in the mining sector you can't. Yep. So you've got to be very careful, and a lot of these stocks rise on the back of speculation. But I'm not saying that this could be a great company in a sense, but I think in terms of what their financial situation is now, I just don't see much in terms of valuing it.
Well, the best thing that Michael said when he was asking that question was that he spent a lot of time doing research into the company himself. And I guess at the end of it, it's going to come down to, does he still believe in the story? Can he see it?
That story could be very dangerous too. If you get too emotional to a stock, it's like anything. Right. You've got to know when to cut your losses and move on. Yeah.
But obviously he's doing the research himself, which is a very positive sign. So, Les, that chart once again, another parabolic rise.
Yeah, it's a pretty. I think. Look, I never used to even give the graphite a second, flake graphite a second look, and a few people that are involved in the business kept telling me to keep looking at graphite, and I actually recommended a company called LMB, at 6 cents about 6 months ago, and today it traded at 82. It's been as high as 96. Well, so it's flake graphite. It's in South Korea and also in Western Australia. So I believe in the graphite story, having been told now, and I understand how the whole thing works. I mean, your mobile phone is about 85% flake graphite. Everyone talks about lithium, that's 15%. The balance of it is flake graphite, not ordinary graphite, flake graphite. So there's a lot of flake graphite needed around the world. However...
Deep well of knowledge, Les.
Well, one learns as one gets older. I've got nothing better to do. However, I would point out, and I would be a little bit wary with that sharp increase in price. I'd probably stick a stop loss in, not too much below where it is now, just to be on the safe side. So if you get hit, you can always go back in again when it drops down again and take some more stock as it goes up. But trust me, flake graphite is going to be a big story.
And can I ask, what is the difference between normal graphite and flake graphite?
Well, normal graphite is worth a couple $100, and flake graphite's worth about $1,600 to $2,000. And what happens is the people who make, your Samsungs, etc., who make your mobile phones, can't use stuff that isn't pure, which is flake graphite. So they buy this product called synthetic graphite, which is pure, but they have to have pure to get in your battery. But that's costing between $35,000 and $60,000 a tonne, whereas flake graphite, good quality, at least 95–96% quality, pure, is about $1,600 to $2,000. So the difference is the stuff that's in your pencil and the stuff you put in your lock when you can't get the key to work, that's just graphite. So the secret is flake graphite. That's the stuff, the pure stuff.
All right, okay. Okay, we're going to take another short break, but we'll be back with more of your questions in just a moment.
You need a website. Why not do it yourself? With Wix drag-and-drop website builder, you don't have to be a programmer to create a professional website that looks stunning. Go to Wix.com. It's easy and free.
Being a new mum, I get bolognese stains from the kids' fingers all over me. It's too much for normal detergent, so I make a paste with Vanish before washing.
Beetroot? Don't worry. Washing powder alone doesn't cut it. So I throw it in the wash with a bit of Vanish. Ta-da! Stains gone.
Vanish removes stains that regular detergent alone can't. Visit the Tip Exchange to share your tips.
15 carriages on an icy slope against bitter winds, just like I did on Everest. You have a Mars bar, son.
With a Mars comes great responsibility.
Hi, I'm Jorge, and this is my house. Life used to be tough, but things are getting better for my community because I'm sponsored by Laura in Australia.
When you sponsor a child, you help whole communities grow. Call 13 32 40 or visit worldvision.com.au.
Start the week with a different viewpoint. Join me as we look at the crucial national issues from outside Canberra's politically correct parliament.
That's the sort of rhetoric that we're protesting against.
Sorry, rhetoric? There'll be big interviews, lively debates.
The Labor Party has been re-energised.
Insightful analysis.
Very little confidence in the state of the economy.
It'll be unashamedly mainstream and there'll be unashamedly strong opinions.
You say it's a contradiction, Chris. I don't accept that it is.
Join me for Viewpoint, live Sunday nights on Sky News.
Welcome back to Thursday night on Your Money, Your Call, where we are discussing shares. If you have a question you'd like answered, pick up the phone, give us a call. The number to call is 1300 30 34 35, or if you prefer, you can email us at yourmoney@skynews.com.au. Let's go to Brian from Brisbane. Brian, are you there?
Evening, gentlemen.
Good evening.
Thanks for taking my call.
No worries.
I'm interested in particularly Les's view of Cockatoo Coal. They produce ultra low volatile coking coal, which reduces the cost of blast furnaces by about $20 million US a year for each blast furnace that uses it. So it is the premium feedstock for those things. So I just wonder what Les thinks of Cockatoo Coal.
Okay, certainly. Les, the price of coal itself has been languishing, like many other commodity prices of recent. Cockatoo Coal, though, obviously got a sort of, I guess, a comparative advantage there. How do you see that?
I'll mention Cockatoo Coal, but before we go to Cockatoo Coal, a lot of people are sort of trumpeting the demise of coal. But it's interesting that the IEA, which is the International Energy Agency, which monitors and reports on all things energy, has said that they think that by the year 2017, coal will actually overtake oil as the #1 fuel. Interesting when you consider that everyone's saying coal's basically dying in the bum, but I don't think it is. Right? So with Cockatoo Coal, I mean, the coking coal is the hard coal, the one that's usually harder to mine, but I think Cockatoo Coal has a great advantage in that it has got coal that they can sell at a cheaper price, because obviously the coking coal is the expensive one, the thermal coal is the cheaper one. And thermal coal doesn't sell for much. Coking coal varies from $200 to $300, or depending on where it is. So I think if you're selling the coal, the coking coal, which is needed in furnaces, etc., and for making iron ore, for steel, etc., that's not going to stop. We're still going to keep building buildings. We're still going to need all that stuff for making that infrastructure. So I think Cockatoo Coal has a good advantage price-wise. And at the end of the day, what are we talking about all the time? The price of this is going up. The price is going down. So if you have something that you can sell that it has a good value, but it has a price advantage, that's got to give you a leg up on the next person down the street and the next person in the next country. So I can't guarantee that Cockatoo Coal is going to go up to great heights, but I think Cockatoo Coal's a good story.
I agree with you in the sense that you say that coal's not going anywhere for the time being. I think the greater concern, though, is the amount of supply coming into the market. Because I think from the last time I saw the stats, and it depends on who you talk to, Australia's got something like 800 years of reserves under the ground. So you're right.
Would you rather have 8? I think 800 is good.
Yeah, it's a good thing.
Yeah, I didn't mean that to you. I mean, would you rather have 8? No, I'd rather have 800.
Exactly. Yeah. But you're right, though. I mean, obviously, it's going to be still used as a cheap alternative to other energy sources while it's still around.
And even when they're making the wind turbines, what do you think they're using to make the metal and the concrete base from? You know, they're using coal to fire up the furnaces that are making those products anyway. Yeah. So I think, you know, coal isn't quite the sad story that everyone makes out, although, of course, the price will go up and the price will go down. But as I say many times, You trade things, they go up, they go down. Otherwise, you don't have a market.
That's right. Wouldn't be fun otherwise, would it?
No, it wouldn't be fun.
Michael, your thoughts on cockatoo and, I guess, the coal sector?
Yeah, look, short-term sentiment, I don't see it being very positive. Cockatoo coal, it's got a good story. My biggest problem is they've acquired more debt. They're not making more money, so they've got negative cash flow. And at this stage, it will be a stock I'll be staying away from.
Okay. One to avoid for the time being.
Yep.
Okay, let's go to an email, and Steve writes, I recently bought into Flexi Group, FXL, only to see the share price fall 20% in 2 months. Ouch. I'm not a chartist, but it looks like the price has now broken a line of resistance/support at $3.50. Can I please have the panel's fundamental and technical analysis, please? Michael, obviously, if share price falls 20% just after you buy it, it's one of the most annoying things. I think it's happened to